With the rise of QR codes and mobile money peer-to-peer payments, I wanted to get a sense of to what extent this really represents a challenge or a threat to the big incumbent credit card providers and even to the banks. So I invited Brad Jones onto the program. Brad has covered all the bases. He's worked at Visa, he's worked at HSBC's PayMe, he has been CEO of mobile money startups such as WaveMoney in Myanmar, and he is now currently running an advisory company called Blue Lotus. We talked about lessons learned or lessons not learned by large financial institutions trying to get their heads and their business models wrapped around the emerging trends of how people, particularly in Asia, are storing, sending, and transacting with their money. Brad Jones, welcome to the JDB Report.
Hey, Jane, good to see you again.
Good to see you. I'm interested to speak with you to get some benefit out of your career's worth of working in digital wallets and mobile money, and understanding what the economics are doing and where the trends are headed for both big incumbents and for startups. So you have worked Visa, you have worked at NAB, IFC, the private sector arm of the World Bank. But then more recently, you were CEO of WaveMoney in Myanmar. That's where we first met.
Yep.
And then you also ran PayMe, which is the Hong Kong wallet under HSBC. And now you're doing consulting and advisory at Blue Lotus for a range of clients. So I want to start, if you don't mind, with going back to your Visa moment and the Fundamo acquisition in South Africa. Tell us a little bit about what that deal was about. What were the aspirations behind that deal and why ultimately, strategically, it did not work out?
Yeah, look, I'm very happy to share some of this, Jane. I mean, I think it's been a very interesting 20 years, I suppose, when I look back in the time I've sort of been in this space. Visa, so I joined Visa in 2010 after I first got involved in digital payments with Wing in Cambodia, actually. So I'd seen, and that, I mean, we started that business in 2008. So it was right on the following pretty much straight after M-Pesa, so very early days. So when I went to Visa, it was interesting. I went to a part of Visa that was not the traditional Visa business unit. We weren't looking at cards so much. We were looking at really how emerging payments were developing, and particularly mobile. And with the growth of businesses in Africa, Visa was really struggling on how it could actually become a part of that transaction, essentially. And interestingly, I think Visa is still struggling today with that question. How do they become a part of that mobile money transaction? And the Fundamo acquisition, at that stage, Fundamo had done quite well. They had secured a significant percentage of the mobile money platform market. They were doing the platform for MTN Money, which is obviously now a behemoth in Africa. They were doing it for EasyPaysa in Pakistan. They were doing it for bKash in Bangladesh. So these are all massive names. And so they had done a pretty good job in actually getting a fairly robust platform out to market. So the Visa thesis at the time, I think, was that we would buy this platform, we would become essentially a mobile money processor, and then we would offer that service up to the telcos and other clients that were moving into the space as a way of actually contributing to in the economics of those transactions. So yeah, so the thesis was very interesting. I think the reality of what happened was a little bit different.
But tell us, what are the lessons from that? I mean, I think this was an early attempt by a global player in payments processing to jump on the rise of mobile wallets. Why didn't it work out? And have those lessons been learned, or do we see institutions repeating those errors?
I think the main challenge with the Fundamo acquisition at the time was it was probably too early, really. And I think if you look at the market now, you're seeing the growth of software as a service platforms. You're obviously seeing massive growth of the platforms like AWS, which are and even into African markets. I think they've got data centers in Johannesburg and these sort of places. So But at that time, you didn't really have that. So we were really offering a service into emerging markets, which probably couldn't really be enabled from a delivery perspective. They were very much having to be on-prem solutions, and Visa wasn't really an on-prem provider at the end of the day. And I think also too, we were really at the wrong end of the transaction. I mean, we were trying to actually own effectively the relationship as a platform provider rather than actually Visa's traditional model of owning the payment. Um, I think it was the right call at the time to try and actually do something that was actually quite transformational. But really, as the market started to move, I think Visa started to realize that they were actually in the wrong space. And that's where they started to move more into services and offerings actually at the point of the transaction.
So when since then we've seen the rise of QR codes, particularly in Asia, and you were part of that with WaveMoney. What has that meant for the way that the economics change, and what kind of is that putting actual pressure on whether it's on the banking side or or the payments processing side, or has it been so kind of relegated to these new low income markets that they haven't really had an effect on the P&Ls of large institutions?
I think it's when you look at the QR code payments, obviously it's really started in China, as we both know, having been based in Hong Kong. I think Alipay and WeChat Pay really revolutionized the QR code payments. I think then the next big accelerator that I would say we saw was actually the pandemic and COVID, and really that massive growth spurt we saw around digital payments, particularly in markets like the Philippines and also Myanmar. I think really what it's been following a really interesting path. I mean, to begin with, we obviously saw all of these closed loops developing, and then you then started to have the governments domestically saying, right, we don't want to see all these closed loop QR code systems develop. We want to actually integrate it much better into our national payment strategies. And so QR code payments started being written into the national payment strategies as part of the retail payment platforms. And then these interoperability platforms have started to be developed. So Prompt Pay in Thailand, MMQR in Myanmar, which is now live, and obviously that's been replicated across the Southeast Asian market. I think that has um, really started to revolutionize the way these payments are happening, because you've taken the traditional Visa and MasterCard four-party model and applied it in a QR code um, uh, construct, but the economics are very different. And in a lot of places, obviously, India, for example, you've had UPI pushing for 0%. In Thailand, it's been at 0%. In Myanmar, there is a payment schedule, but at this stage, it's still actually generally running at about 0% MDR as well. So you just don't have the economics that you've had with traditional schemes in these QR code systems. So from a customer perspective, I think they're actually very convenient, and we're seeing this interoperability is actually driving a lot of usage and driving a lot of benefit to customers and merchants. From the provider's perspective, it's a little bit more challenging because there's not a lot of money actually in the payment themselves, which makes it very difficult then for a scheme. So where do you take a traditional Visa and MasterCard model and overlay on that, where all you're really going to be adding is additional cost as part of the transaction that occurs?
What do participants in the market, consumers, users, merchants, as well as service providers on top, what do they miss out if you are in an ecosystem where it's, zero MDR, it's basically becoming like a national public infrastructure, or it's being molded into that strategy rather than a purely market-based network approach, which is developed first in the US. So the benefits obviously are clear. Consumers get to have very affordable and very fast and effective payment services first initially in their own country, and then increasingly we're seeing that patch regionally. But is there also a downside to the path that these Asian governments and players are taking? like in terms of services they won't be able to provide?
I think it actually has to be looked at in an holistic financial inclusion play to a great extent.
Mhm.
So I think the downside at the moment for the providers is that they're having to provide massive scale, and obviously with scale comes cost. And really, the economics of providing these merchant networks and so on are actually fairly limited at the moment. I think really where we're seeing this go is that the merchant activity is becoming a signal that then enables the lending opportunity for the providers to actually move in and actually do merchant lending and so on. So I think providers are having to find different ways to actually monetize these networks, and a lot more actively, I think, than has happened in the past with the banks in, say, traditional acquiring networks, because the revenue and the income is just not going to be there necessarily to begin with. So I think, yeah, it's much more of a holistic play, I think, that has a great potential for financial inclusion and providing, that lending opportunity, particularly to the segment that where these QR codes are starting to dominate, which is obviously much more at the lower end of the merchant ecosystem, and into merchants who've been traditionally cash.
Is there an opportunity for QRs and wallets which are account to account rather than network based, right? I mean, they connect my account with your account and I can send and receive money to you directly, um, which is great at that kind of small remittance level. But if you want to do anything in the corporate world or any kind of B2B, does account make sense at that scale? Can it be scaled up in that way, or will there be a point where some of these emerging networks will have to shift to a more, well, I guess I shouldn't say network. These emerging constellations will shift to a network that resembles more what a Visa or MasterCard looks like.
Yeah, I think, I mean, at the B2B level, I think um, the cust I see the potential really for um, value-added services actually coming in at that B2B level, where merchants, for example, that may traditionally have been running their businesses much more on a notebook and pen type of basis, are actually having tools provided as part of their proposition. So they're starting to run basic accounting systems and basic stock keeping systems and these type of things. Um, I think the account to account, or basically a P2P transaction, as we call them in these sort of markets, they certainly have not gone away, and I think they're very much, I know from the markets I look at, P2P is still a very significant transaction that's actually happening. And there is actually a lot of cases where customers are bypassing merchant payments actually just to do P2P. And this is probably the challenge that you see with the 0% MDR, because if where people are actually trying to, or where countries are trying to actually bring MDRs in, the merchants will find ways to actually make those transactions without actually paying, and this is where P2P starts to come in. So it's a very delicate ecosystem, Jane, the whole thing. I think, and it takes a lot of trial and error to try and get these systems functioning the right way.
What would be some in the past 10 years you've noticed? Have there been any wrong turns you've seen that are now being corrected, or to enable this new world of P2P to grow and scale and provide value for everybody? Have there been some mistakes along the way and some lessons learned there as well?
I think if I look from the scheme perspective, I find it interesting that the schemes are really only starting to wake up to how much these systems are starting to take over payments in these markets at a local perspective, and then the risk that they present from a cross-border perspective. I published an article on LinkedIn recently where I talked about this, and I was very clear that we're not going to see QR code systems take over cross-border payments from a Visa and Mastercard perspective anytime soon, but it will happen. And even if it only happens at a transaction number perspective rather than a value perspective, we are going to see that the dominant financial instrument for a lot of these consumers in Southeast Asian markets to be a wallet more so than the bank account. So I'd say probably the one of the mistakes I would say is that the schemes have just taken a while to wake up to this. And I know now, because I know some of the people who are in these roles, they've got some very smart people now looking at these particular problems and starting to roll out new products to try and actually have a proposition. And this actually sort of was the thesis that I actually had in that paper was that, Fundamo was actually an attempt by Visa to do this in 2011.
Right.
And fast forward to 2026, and they're still actually trying to find the right models to actually go into these markets and actually offer them. So yeah, I think from a scheme perspective and from a government perspective, I think they've done extremely well. So not scheme perspective, from a provider perspective in these markets and from a government perspective, I think they've done very well. You look at somewhere like Cambodia. I mean, I started there in 2008. Um, the governor of the central bank there is just an absolute champion for this type of technology and this type of payment capability. She's personally sponsored Bekong, which is the interoperable Cambodian payment system, which is now allowing cross-border payments in a number of markets through Southeast Asia. So from a regulatory perspective, you're seeing regulators in some markets get right behind this. So yeah, so if I summarize that, I think the individual providers, the Gcashers and these sort of companies have done very well and have actually accelerated it. A lot of the regulators are doing the right thing. So it's probably the schemes more that have been a little bit behind the eight ball.
What about the banks? Where do they fit into this? As they're seeing more and more people go just to a wallet. A wallet's still quite limited in what it does, uh, but that's where the trend seems to be. What is how do you see the difference dissolving? To what extent can the barriers between what is a wallet versus what is a bank account, do you see that going to change? Are we going to have to redefine what these things are? Will they become indistinguishable, or will there still remain a quite distinct business model serving one versus the other?
It's really interesting that there's very much a North Asia and a Southeast Asia perspective on this. And I think having just spent some time in Hong Kong, very, very much overbanked market and obviously an overcarded market. I think it's one of the most over carded markets in the world for credit cards. Despite that, wallets are huge. And you see, PayMe, Alipay, Octopus obviously are all competing very heavily in that market. So the role of the bank has become really just a funding instrument for a lot of payments that are starting to happen. And I don't think the wallets are going to take over credit cards in the near future, but certainly in the years ahead, the projections we used to look at, the wallets would take a share over the cards in the future. So Southeast Asia, I think, really where the population in many of the markets is either underbanked or unbanked. Why would you need a bank account? I mean, if the wallets now, Philippines is a great market. What you can do with Gcash as a financial instrument. Why would you need a bank account if your needs don't go to that point? I mean, you can borrow money, you can have wealth products, you can have pretty much anything that you'd be looking to have. So I think wallets are and the numbers support it. I mean, the projections we've got for wallets in Asia Pacific as a percentage of the overall payment volume is massive and growing. So I think it's interesting that banks haven't done more, I think, in Southeast Asia around wallets and been more aggressive. And that was actually always something interesting that HSBC had done with PayMe, I think.
And are banks not being aggressive in that regard because they just don't know what to do, or they don't take it seriously, or they see it as a threat, or they haven't just worked out the right approach?
I think well, obviously in some markets they have taken a position. I mean, DBS we saw with PayLah, and I think in other markets, I just think they've probably just been a bit behind the eight ball, and then they've woken up and it's been too late. So these other providers have started to dominate. Vietnam is a very interesting market at the moment, and you obviously had businesses like Momo, which have been very successful, but the maturity of the banks is getting to the point now where they're offering wallet-like services with the bank accounts that I think it is starting to challenge some of the wallets. So I would say in the next couple of years, one of the markets that we may see banks getting serious about challenging wallets is actually Vietnam. And it could be interesting to see what direction that goes.
Because I want to ask you, what is more likely that the banks will figure out how to appeal to wallet users and create some sort of deposit light for them? Or is it more likely that the wallets themselves will find ways to evolve and become much more bank-like? And my follow-up question to that one is, what are the missteps that could be, some of the traps that could await wallet providers that begin to expand into areas where they just don't have experience?
Yeah, I mean, I think those things, I think that that is happening. I mean, banks are becoming more like wallets, wallets are becoming more like banks. We do see that sorry, we do see wallets that actually go down the path of getting formally licensed. Maya in the Philippines, for example, started as a digital wallet, now a fully licensed bank. Wing in Cambodia, I mean, I saw today it's the fifth largest bank in Cambodia now by assets, and started as a digital wallet. So I think we are definitely seeing that. Probably, I think it's interesting looking at what are the pitfalls that they're going down. Probably underestimating the regulatory burden that comes with going down that full path to a banking license, I would say. And on the banking side, not necessarily having the right culture to support the business model and the product development to actually support those wallet-like businesses. So I think the banks have done a lot of work on design and really building products that actually are very relevant to customers. But there's a long way to go in a lot of banks in Asia, that's for sure.
It seems to me that the biggest challenge is that financial institutions in general prefer to serve wealthy customers, not poor customers or low-income customers. The cost of service per capita has always been too high to bother with a lot of low-income customers or small businesses. And so this is why we've always had this financial inclusion problem because for the banks, it just doesn't, the numbers for them don't add up. They'd rather just stick with middle income and above. Um, to what extent has I guess fintech and mobile wallets and QRs has that changed that economics for financial inclusion? And if you are in a large bank, do you have the the ability to develop, an attractive margin on serving low income or small businesses using these tools? And have they really looked how to develop that, or is it still going to be a lot of reluctance, or just, internally, those teams will never be as successful because they're dealing with just low income, small ticket stuff?
There's some themes that actually I think are challenging with this. And firstly, I mean, the underbanked consumer is definitely going to deliver less revenue for the bank today. But as you know, in Southeast Asia, we're seeing this incredible middle class emerging now. And these countries are getting wealthier. So those underbanked consumers will be the emerging middle class of tomorrow if they're not already. So I think the banks that are thinking about this and are actually preparing for this are ones that are actually building out product and capability for customers of tomorrow by giving them something that delivers value to them today. The challenge that comes from banks, and having worked in banks, is that most banks don't think, well, most bank executives don't think long term on these things because they're being remunerated short term. So I think this is always the challenge, right? Is that going down market into these segments, and you still have the same level of risk and compliance obligations and overheads for these consumers as you do for the high net worth consumers. So I think the challenge is always going to be for bankers that they'll go with where the money is, and and don't go after that opportunity. But there are banks obviously that maybe perhaps their legacy businesses that they have obviously large segments of this type of population, or banks like GoTime in the Philippines, right, who are going ahead gangbusters, who are basically building out a proposition that can actually serve these customers at low cost. So
Winners and losers. Obviously it's not cut and dry in terms of categories. It comes down to individual business decisions and management. But what do you think will be the forces that will shape, if you look at card schemes, banks, wallet operators, and the and the fintechs, what will be the choices that they're going to have to make that will determine if they're going to, in 10 years from now, still enjoy the same growth, same margins that they have today?
well, I think they've all facing different challenges. I mean, I think we just talked about before banks becoming wallets, wallets becoming banks. There's obviously a lot of pressure there. I mean, the growth will start to slow down in a lot of these markets, and as the population starts to be maxed out in terms of actually maximum reach. So I think profitability is obviously is the key challenge, and actually maintaining that profitability by new products, innovative products, the impact of AI, agentic AI, particularly in merchant payments, and actually how that's going to change. How can you take agentic AI solutions into this bottom of the pyramid market, and particularly that's very rapidly moving into QR codes, and actually use this as an opportunity. So I think, there's I see lots of interesting things that are going to be happening in the next few years, that's for sure.
Last question for you, Brad. Stablecoins is a hot topic. Does that touch your world, and what do you think of both the hype and perhaps the reality of using these as payments tools cross-border? Do you see this as of interest to wallet providers?
I do, and I think there's a couple of interesting use cases that are emerging. So I saw, I've seen actually how stable coins are actually in emerging markets, particularly in markets where perhaps there is less stability in the economies. How stable coins are definitely playing a big role. I think we're obviously seeing the gig economy is growing, freelancers, this type of thing. I mean, so I'm sure there's a lot of people in Southeast Asia now that are starting to actually take payment in stablecoin for web development or different type of solutions. I think the interesting thing for wallet providers is that as people are coming, say, let's take, for example, Singapore as a market. If you've got people coming from adjacent markets where stablecoin usage is perhaps growing very fast, and if you're a wallet provider, having the ability for them to use stablecoin to, say, top up a wallet in Singapore versus adding a credit card, I think is a very interesting use case. And that's now actually live through AAA, Eric Barbier's business into Grab wallets. So I find that very interesting, because all of a sudden, you've got a consumer coming from a Southeast Asian market who doesn't have to have a credit card anymore. They don't have to have a debit card, and they can use their stablecoin to actually do that transaction. So yeah, I think for me, a funding mechanism for wallets, very interesting, and potentially, if regulations allow, having the ability to hold stablecoin alongside the currency of the market, I think is a very interesting use case as well. So yeah, I watch it with a lot of interest.
Great. Brad Jones, where do people find you?
So I'm working. I'm very happy to be back home in Australia after nearly 20 years in Asia, but most of my work is in Asia with a little bit in Africa. So I'm off and up in Asia. We'll be back in Singapore this year for Fintech Festival, and working across a number of different fintech clients. So
How do they get in touch with Blue Lotus?
So have a look at my website, bluelotus.partners, or find me on LinkedIn.
Great. Brad Jones, thank you so much for joining me at the JDB Report.
Great. Thanks, James. My pleasure.